Letlole La Rona Fund, listed on the Botswana Stock Exchange in June 2011 and has a market cap of 364 million rand. It's an income fund, paying out income distribution and operating within a performance margin of 78%. Dimitri Kokinas from Stanlib Direct Property Investments joins us in the studio to make his case for property investment into Botswana. Thanks so much for your time. How have things been since the listing in June 2011? Perhaps an appropriate starting point.
Bronwyn, you know, Bots is quite a small market, and Letlole La Rona listed in June at a price of 150 or so. We've seen it go down, we've seen it come up, and we've seen it steadily hold itself now. So really what we're seeing is that you know, demand for real estate and real estate products within Botswana is on the increase. So if you look at sort of what's happening in the Botswanan market, in the market cap itself, listed real estate makes up about 9.5% of your total listed sector in market cap. If you look at what's happened for Letlole La Rona, we have seen a 22% increase in our share price since April, since I've taken over, and that marked versus 7% on the full market cap of you know, the stock exchange, I think is pretty good actually.
Dimitri, just on that, I think for the benefit of viewers, just explain your role as Stanlib in this listed property fund and how you what you're responsible for.
So Stanlib has won the asset management contract to actually look after Letlole La Rona, and in that asset management contract I've been seconded, so I am now effectively the CEO of Letlole La Rona, and I will be seen as the face thereof. So really I have a board of directors and I operate that as a listed entity, which it is, and that's really where Stanlib stands.
Let's chat about the property that falls into the fold. You've got a dearth of retail exposure right now. Why is that? Is that just how the economy is structured?
You know, what happened was the Botswana Development Corporation actually listed an entity, which was effectively Letlole La Rona. When they did that, they didn't have exposure to retail, and I've identified that we do need retail exposure within this property sort of portfolio just to actually help with the diversification. So we don't have it at the moment. We have quite heavily weighted in industrial. We're at 42%, and if you're looking at leisure, we're at about 32%. So about 75% of your fund is actually made up of leisure as well as industrial. So we're quite heavily weighted.
And just on that, Dimitri, in terms of the underlying economy in Botswana, I think could you just give us some insight as to what's driving the economy and what are some of the trends that you're seeing in terms of developing properties or funding properties going forward? Is Gaborone the focus of the fund, and if not, where are some of the other areas you're invested in?
To put things into perspective, the population of Bots is only about 2 million people, and Gaborone about 250,000 people. So what you've seen in the last couple of years is there's been a huge influx of commercial property, and this fund is actually not exposed to commercial property as much as other investors are. So by 2014, I think we're going to see about 120,000 of additional office space coming to the market. And for me, that's a worrying factor.
Is that right?
Yes.
Okay.
For me, that's a worrying factor in the Botswanan real estate market. What's driving the actual economy? I mean, it is heavily weighted towards obviously the diamonds and resources. You know, and resources. So
and cattle.
And cattle. You know, I like to say cattle. Actually, the Botswana, his investment pool at his later on in his life actually is his cattle. And what we're trying to do is actually change the mentality to say invest in real estate. So that's what we're trying to work, and that's sort of the marketing campaign we're going to go on.
Okay, but that's a hell of a big step, Dimitri, to go from owning some pastoral cattle to investing on the Botswana Stock Exchange. Just in terms of the local market there, obviously you've done this with the perspective, I imagine, of the institutional investor. Can you tell us some of the players in the institutional market that are buying your shares on the exchange?
No, at the moment, a large chunk of that is held by the BDC, which is the Botswana Development Corporation.
So is that the equivalent of the IDC in South Africa?
Indeed.
Okay.
And then you're seeing some of the other asset managers holding stakes. You know, the problem within Botswana market, and that's not specifically for us, it's specifically for the whole market, is actually that there's no liquidity in the market. So a couple of people actually hold those shares. But if you go and look at the breakdown of our actual shareholding, we have 1,500 investors holding different shares, and we are trading in a closed period right now. So results are out back end of next week. And in that case, I expect a little bit of trading to come out based on, we're going to put out our strategy, we're obviously going to put out our results, and hopefully somebody bites for that.
Yeah, that's very interesting. I mean, obviously the appeal for the South African investor for this type of fund is that it's run by a South African, and there's a South African firm involved there, which I think brings confidence. But could you just tell us, what would the rationale for a South African investor be to take a punt look to invest in your company?
Beyond the fact that yields are higher in Botswana in the property space.
So I mean, there's a big emphasis at this point in time, let's go to Africa, let's go to Africa. So what we've seen in the last couple of weeks, obviously Stanlib's launched their direct property, African development. So that's a slightly different product, but this one is obviously an income stream. So really what you're going to look at in Botswana is that you're trading at a much higher yield than you are in South Africa. So funds are trading between 9.5% to 10% in real estate terms, versus South Africa, which is substantially less than that. You're looking at 7-ish, around that marker. So there is a bit of yield to gain there. But what you're actually getting is exposure to an African sector. So what you've seen in Botswana is that you can't necessarily buy that much real estate any longer because there's a lot of money in that market. But the Botswanan funds are actually moving outside of the borders of Botswana. So you've seen them go to Zambia, you've seen them go to Tanzania, and I think that's a trend we're going to see going on. So it's a way to get into Africa, really.
As you've pointed out, there's been a huge boom in office space, or the need for office space in Botswana, hence the skewing of your portfolio to the industrial property. Is that growth in office space going to continue?
A couple of years ago, the Botswanan government granted rights to developers, let's say, and they had 10 years in which to develop that property. And now we're reaching the end of that 10-year cycle. So that's why we're seeing a huge stream of commercial coming on stream. So I don't think actually we're going to see it. So once this is built, I don't see that happening. There's been quite a lot of retail development in the last couple of years within Gaborone. We are starting to see that the funds are looking outside of Gabs.
And so just in terms of the geographical alignment, so Gaborone is where all the action's at. There's other towns in Botswana obviously as well, Francistown being one of them. Is there scope to grow there? And then I just wanted to ask you, included in that, in the expansion plans, obviously what's your expectations for being able to grow the distribution in Botswana, so from the property yield that investors would enjoy?
All right. So we can start first at sort of the geographical spread. So Gaborone is definitely the dominating factor within in the Gabs market, in the Botswanan market. But Francistown is the next biggest town. Then we've seen Silibi Pikwe, we've seen Mahalape. There is development going on there, and there are people who are looking at potential developments, but again on a much smaller scale. Spending power isn't there. So that's, let's say, on a geographical spread. If you look at leisure, it's very much on the northern side. So it's very much where the game reserves are and that type of stuff. So that is and
it makes sense, given the nature of Botswana's economy, that would make up about 32% of your property portfolio.
So they are there. In terms of, I can't remember. Can you just brief me on what
the distribution growth? So from the yield you've got, which is at about 9%, you indicated. How do you expect to grow that?
So really, the good thing I have is that my fund is actually very undervalued in terms of rental growth. So where I see this going to in the next couple of years is actually by real asset management. So actually monitoring what's going on, looking at market trends. I think we have the ability to push rental levels up. And if we're able to push rental levels up and we operate at the same margins as what we're operating now, we will see an increased distribution.
In terms of similar funds on the market, are there other offerings that compete directly with you?
Everybody is operating in about the same market. If you look at our portfolio, obviously we've got the industrial sector, which none of the other funds have. They have the retail sector, which we don't necessarily have. So I think what we're going to look at, and what I hopefully am able to do, is maybe do a JV with somebody or something along that line that will allow me to get exposure, and maybe allow them to get exposure to sort of the assets we hold.
And the retail exposure that you are looking to include, how far are you going to go in terms of proportion of your fund into retail?
I think we set a factor of about 25 to 30%. That is sort of what we're going to look at. So my mandate is to grow this fund within the next 3 to 5 years and double its size. and I don't want to dispose of assets. So I really want to realign sort of the benchmarks by actually acquiring.
Just in terms of investing, Dimitri, we understand that the parity between the pula and the rand has been pretty constant. Is there any exchange rate risk for investors that would move money from South Africa into Botswana?
There is. I mean, you can't really, you don't know what's going to happen with resources, you don't know what's going to happen in South Africa, you don't really know. There is risk, but if you actually look at what's happened in the last 2 years, there's been a fluctuation, I think, of 3.5% to 4% in the whole exchange rate. So it's pretty minimal, actually.
And just going back to the rationale for South African investors diversifying beyond South Africa, what would that be in terms of investing in Letlole La Rona?
Well, I think you gain pool exposure. I think that's the first thing. I think so. It's a different risk to your rand. I think the second thing really is that you are getting a higher yielding asset than what you can get in South Africa with growth, actual, I'm going to call it upside. There really is upside, not in our stock, but in all the real estate stock. And then you're looking at an African flavor, really. So if you are a South African brand and you're looking to sort of get exposure to an African sector, this is a good one to go to.
Unfortunately, Warren, we're out of time. Dimitri, thanks very much. That's Dimitri Kokinos from Stanlib Direct Property Investments.